I would like to welcome everyone to a panel that I think is going to provide us with unique insight from three, if I can call you industry gurus, on the future direction of the shipping industry. The title of our forum is Sailing into Recovery. And I think during this day and a half so far, we have sensed cautious optimism from everyone on the panels. Here we have the opportunity to have with us three, as I mentioned, industry gurus. Michael Parker, the chairman of Global Shipping, Logistics and Offshore at Citi. Michael Borch, managing director and global co-head of transportation investment banking at Citi. And of course, Dr. Martin Stopford, non-executive president at Clarkson Research Services. So these three gentlemen have a long career in shipping and in the financial and capital markets. They will share with us what is different this time. Why can we look ahead with optimism? What makes the world move differently? So without any further delay, I will turn it over to them. I would like to thank Martin, who has been with us so many times, for joining us again. And of course, the two Michaels, because this event is organized in partnership with Citi. So I would like to thank you again for your continued partnership and cooperation and support, and the whole Citi team that shared with us the heavy lifting of putting this wonderful conference together. So thank you very much. And Michael Parker, the floor is yours.
Thank you, Nicholas, and thank you for this opportunity to speak to this audience. Hopefully we will be as optimistic at the end as we hopefully will be at the beginning. I was reflecting that it's literally a year ago, Nicholas, that you got me and Graham Henderson of Shirley in conversation on Zoom. It was my first use of Zoom, and actually it was surprisingly effective. And that's about a year ago. And what struck me about a number of your panels over the last 2 days is how much has changed, how the real sense of change around the industry, accelerated by COVID, and I think accelerated by this digital format that we're actually talking in, because we're all spending, as you said before to us, that so much time actually talking and listening to each other through this medium, as opposed to sitting in the Metropolitan Club with half the audience looking at their Blackberries and sending WhatsApp messages to each other. So, you know, I think really there has been a lot of change, and that's really exciting. And what I was very excited about was I bought this book by Bill Gates. He doesn't need the money. Bill Gates, How to Avoid a Climate Disaster. And what I feel is important about that is both the recognition that technology is so important, but that actually someone who's done so much to help eradicate certain diseases in Africa and the rest of the world is now engaging in climate change. There may be cynics who give him other motives, but actually for someone like Bill to get involved in this. And I want to use that to ask Martin a question. Martin and I have appeared many, many times together during the pandemic and before. Now, Martin, Bill Gates argues in his book and in articles and TV interviews he's done that governments and the private sector need to invest and innovate more urgently in the hard to abate sectors like shipping and aviation in order to motivate investors, even if there's a lower cost of capital and thus lower returns. But in the hard to abate industries, the decarbonization of the overall global economy will be sped up. Other industries, electric cars, those things will take care of themselves. Now, Martin, you're someone who's previously expressed a view that this will be a slow transformation, as in previous technological shifts in shipping that have taken much longer periods to transition. Has the last 12 months changed your view? And from a purely technical perspective, what do you feel can be achieved in the next 2 to 3 years? And a secondary question, you were an early advocate of the impact of digitalization on ship operations, as well as the digital sales process, the consumer end, if you like. Has COVID slowed one side while accelerating the other? Have you changed your mind, Martin?
Well, of course, I always try to say something different in every talk, you know, and then you hedge your bets. But Michael, thanks for that question. I mean, who can disagree with Bill Gates? You know, we've all lived with Bill's products for the last, what is it, nearly 40 years now, and they've done a very good job in many ways. I think we know what the goal is. If there's one thing that's absolutely clear from the last 12 months, we've talked the goal to death. We've talked about every aspect of what we've got to do. And basically, we're expected to continue to move 10 to 15 billion tons of cargo a year around the world. It's just that we've got to do it without fossil fuels. And that is really a massive challenge for something like ships, because ships are actually, you know, they're heavy carriers. They're already pretty efficient. And so you've got a job to do there. And the problem is, you know, it's okay for Bill to say, okay, spend money, invest, but that's easier said than done. I think, you know, anyone who's been in business knows very well that you can, you know, you spend first and repent later. You pour money into, you need things you can invest in. And the problem with a lot of the stuff that's available to us in shipping as new technology today is not actually an off-the-shelf product. It's not like buying a robot and sticking it onto a car plant. It's things that are more like the tools that a carpenter uses. You buy the tools and then you've got to put them to work. And I think there's three sort of different levels at which we're dealing with technology and investment. And when you look through these, I think what I'm going to suggest is that maybe you're not going to invest in the areas that you would normally invest in, which is in shipping is very hardware orientated. The first of the three things, well, the three things are improvement engineering, evolving new ways of operating ships and managing them, and thirdly, actual innovation, where you come up with completely new designs for, you know, the sort of zero carbon ships and things like that. And to go back to your question, the only things you can do really within the next 2 or 3 years are improvement engineering and maybe evolving systems and things. And I think, you know, the evidence of people who've looked very carefully into the improvement engineering is that there is a lot of things that you can do on a ship. You know, better heat recovery, not just from the exhaust gas, but from oil and other things, and steam management, which is a very neglected part of the ship. Management of electricity, measuring and managing electricity on board ships is something that's often not really looked at, and there's some fantastic technology. You don't save an enormous amount, but you know, LED lights and controlling air conditioners and getting your generating sets to run in the sweet spot, not actually, because a lot of the electricity is generated by auxiliaries which are not always running at their optimum output. And these are things that you can do. The problem is that to persuade companies to do them, and very often finance directors don't want to do anything they can't get a 2-year payback on. And therefore, these so-called small projects, of which there are many, get left on the side. Condition-based maintenance, another perfect example of this. And so, you know, you don't get this sort of total built up of many small things. And I think the essence of a lot of this technology is exactly that. It's building a better product from many small improvements, and that's the improvement engineering. The evolution deals with the systems and the way you manage the ships, and the fundamental innovation is where you get onto things like zero carbon fuel, redesigning the whole ship as an electrical ship rather than, you know, you have to really blank sheet of paper and let's rethink the whole electrical system. And these are things you're not going to do in 3 years. I mean, you know, this is stuff that's going to more like going from sail to steam. This is 10 or 15 years to get something like that working. So, I mean, my answer is to the first question is, sorry, this is getting, well, you know, you ask an economist a question and you can't stop him, you know. There's a lot you can do now, but I feel that the organization structure and the way we run our finance, the way we compile management accounts, all this stuff is not really, it's worked fine over 50 years of minute cost cutting, which is really the character of shipping in the last 50 years. You shave your costs to the bone so you can pay the banker in the recession, you know. We've got to somehow get to a point where the companies have the resources, have the management accounts, have the carbon management information to actually look at this a better way and to cooperate between departments. So that's the first thing. On your second question, which I think I've forgotten what it is, Michael. What's
digitalization?
Digitalization, yes. I think, you know, the gist of what you said was that we're moving from along two different roads, one of which is smart ships or autonomous ships ultimately, but in the meantime, a focus on digitalizing what goes on board the ships, which is something I talked about a lot, you know, for quite a few years now. And the other is using the new and much better communications. We've got the satellites and the matrix systems and so forth to actually improve the logistics. And I wouldn't say that this balance has changed all that much. I think that people generally are aware of the logistics and they're aware of the demands for telematics on board ships. There's a whole flood of stuff coming out of the equipment industry, you know, pumps and valves and things fitted with telematic devices and mesh systems and things like that. My big concern there is that we're not coordinating it very well. So you risk having a fleet of 50 ships with many different systems. But I think that part of the system is moving along, but has a long way to go. The logistics system is, I think, really struggling quite a lot on the underlying documentation and the fact that to get logistics working, you have to get a lot of different stakeholders all singing to the same hymn sheet, as they say. And that is
okay. Let's come back to that, because I think Michael Borch will have a view on this topic too. But what I think I've interpreted you saying, and I'm comparing it slightly to what the renewal of the fleet panel said a couple of hours ago, and it's not inconsistent, but there are people dealing with the real choices they face, and I think they would agree with your sort of incremental 2 to 3 year things, and that's really associated, I suppose, with the transition, being seen to do things in the transition, whilst of course preparing to invest for the bigger things. So, Michael,
just before you ask me a question, Michael, I put my hand up because I was keen to ask a question actually of Martin, and we can try and frame this quickly. But I wanted to challenge a little bit the thinking, because what I see, and the reason why I'm so very positive, is that this roadmap to decarbonization, I think, is actually the best thing that's ever happened to the shipping industry. In the 30 years that I've been in the industry, supply has always been the problem, whether that's supply of ships, supply of capital. Now we have a situation where propulsion is really a question. Actually, to the end user, transportation is fundamentally free. So you have tremendous upside in terms of return on investment because the cost of transportation is so low. It ought to be the case that when we get into a more supply constrained environment, which is going to naturally happen because owners aren't ordering ships, we will have the financial ability, Martin, to actually go ahead and do some of these major improvements you're talking about. So I think it could be a fundamentally different future where there's just more money to put to work.
Well, Michael, do you want me to answer?
So Martin, no, I don't want you to answer that. You can hold it. You can answer it
Okay,
later.
let's hold that thought. I've got a comment, but I'm not going to.
Hold that.
Fair enough.
This is a primarily a finance type conference co-sponsored by Citi. So let me ask one of the leading practitioners in investment banking. Michael, the equity markets for shipping have been very volatile. We've heard that yesterday and today, but Citi and you in particular have been involved in the two most recent IPOs, the Sovcomflot IPO on the Moscow exchange and the more recent Zim offering in the US. Both very different sectors of shipping, different investors. Do you see these as opportunistic one-offs or the start of a new trend, one which is more infrastructure related in the energy space and one more logistics and supply chain in the container sector?
Yeah, I think
is Zim going to be the forerunner of many more investments by the US equity markets in the container sector? And then a third question for you to cover is we often talk about consolidation, and you've personally been involved in many of the container mergers in recent years. Do you think M&A activity from outside the industry will become a theme as the lines between industries blur in the face of this technological change and environmental scrutiny?
Yeah, so thanks, Michael. And actually, my answer aligns a bit with the question I just asked. So I think clearly two very different IPOs, but very interesting that they both got done, because the equity markets have not been in love with shipping IPOs for the last 6 years. I'm not clear they're in love with equity IPOs for shipping companies today, but certainly having done these two deals and lots of follow-on equities also getting done, the feeling is that interest of institutional investors for shipping is coming back. What I would say is, for me, fundamentally, the really interesting thing about the Zim IPO is that as a practitioner, I have always used price to book value as my North Star in terms of how to value a company, whether for M&A or for equity. And what you saw with Zim was a company that was essentially a 75-year-old startup, because they had accrued losses over so many years that they had no book equity to speak of. So how do you take public a company that has no book equity? And that's where the pivot happened, that I think it does mark the difference to this concept of a more utility-like future where people are rewarding shipping companies and operators by reference to their earnings. Because what the equity market accepted with Zim was a multiple of earnings. So this was a company that was going to have a steady cash flow stream over a long time. Despite being relatively a subscale company, it was a company that investors thought could compete. And so they accepted this idea of earnings and gave a company an equity value of, today it's close to $2 billion, with no actual accounting book value. That is a huge shift for the industry. This was less true of the Sovcomflot IPO, which was more traditionally based on metrics like dividend yield, price to book value. There was a real book value there. But also we had very much the argument of enterprise value to EBITDA. And the core comp for that company was a diversified shipping company out of Malaysia, MISC. And investors cared very much about this idea of an industrial shipping company that would deliver earnings over the long term. So I think to be successful, what we have to look for are companies that are service orientated rather than commodity companies. And those companies, I think, will attract investor interest. So I think I've answered question 1 and question 2 there in the same set of comments. As for section 3, or your third question, that's really interesting, because if you look at a company like Amazon, Amazon owns its own airline today, Prime Air. And so you have to think, why does Amazon, super clever, asset light, logistics orientated company, very consumer orientated, why do they go and invest in aircraft, which have historically been extraordinarily volatile, when lots of other people can do that for them? The reason is that it matters enormously to them that their stuff shows up at the right point at the right time. And so they need to own their own aircraft to facilitate that. So yes, you could imagine a situation where a player like Amazon says, I need to control my capacity. The best way to do it is to do M&A and buy either a big logistics company or a big container shipping company. I think it's relatively unlikely because Amazon simply doesn't have the expertise, but it's not inconceivable. And then my final remark would be that there's a lot of infrastructure type capital that is definitely coming from outside the industry that is looking at deals like the TK shuttle tanker deal of a couple of years ago. They're looking at deals where they're seeing infrastructure like cash flows by service providers. So shipping is always very adept at finding ways to attract new capital.
Yeah. Michael, picking up on the discussion earlier and Michael Borch's points, I mean, you've been very much involved in getting to Zero Coalition and First Mover Group and really trying to bring together the stakeholders in this change. I think that whatever the difficulties there might be in doing something in 2 or 3 years, it's all going to cost an awful lot of money. I mean, we all agree about that. That my figure, could be between $4 and $8 trillion by the time we've finished. So the question I'd ask you is how is this technology going to, how is the industry going to produce the finance? What's the best routes that it can go down to really get the cash behind the big ticket zero carbon investments that come along when they come along? And that's not just the provision of ships, it's fuel as well.
It's a very good question. And whilst I agree with Michael, this last few years has been very exciting in what's gone on in the industry. The next few are going to be they're going to be huge game changers. And the question is, as we've been discussing, is how fast and where does the money come from? But I think what I'm struck by is the speed with which things are changing. And I think you have to put it in the context of COVID, frankly. This is the first global crisis we've faced in our lifetime. Some of the issues, of course, are political, and that's sort of inevitable. But if climate change is viewed, if you like, as a global challenge, then the pulling together, whether it's technology, whether it is investment, in COVID through the pharmaceutical industry, we've seen what money can do. So I am much more optimistic than I would have been even 18 months ago, that actually this coming together is not show. The sort of collaboration people talk about, and I've heard it on some of the other panels, is really quite genuine. And I think people are genuinely excited by it. But what I put it in is the broader context, which shipping is not used to being part of and needs to be part of from now on, is putting it in this context of what do investors want? What does Larry Fink write about? So you've got a series of things all moving in the same direction, where the power of that will make things happen, I think, more quickly. And certainly I concede your historical knowledge of our industry is the best anyone could possibly have. But I think this is a potential one-off huge shift that we will get net zero emission vessels on the water by 2030. You see it in some of the decisions already being made. Clearly, dual fuel use of LNG in the meantime is part of that transition. So I think the investment will come from governments through subsidies, through carbon levies, whatever governments regionally or globally decide, and the private sector. And I think Bill Gates's point really is, just because it's difficult in these sectors, don't sort of leave them behind. And I think it's essential for shipping to position itself as the industry that connects all other industries. And so it's through the cargo, and this is what fundamentally changes the economics of the industry. It's through the cargo paying for the environmental consequences and paying for the technological advances that are needed, that society as a whole will end up paying for this. In previous panels, people have talked about, the different cost of shipping a commodity or a finished good or whatever. Because this data on emissions gives us, and regulators and investors all want that standardized. They want to understand it in a way that, all of us, it's not just a technical thing for experts, it's all understood by the consumer as well. When we've got that whole new level of understanding, it'll be much easier for people to invest. Now, the challenge, I think, is going to be, this isn't, the older ones, including you two, will know the difference between VHS and Betamax. We don't want to have a sort of, there are only two solutions, therefore invest in one of those. We need to see all the different solutions that are being piloted now. But a key thing, and we haven't mentioned it yet, but we should mention it, COP26 in Glasgow in November is a very key event for two reasons. One is it is 5 years post the Paris Agreement. It's supposed to review that. I think what's happened in the last 18 months suggests that the IMO does need to actually be more ambitious than the current target it has. So I think that will be talked about in Glasgow. And I think also that what the climate change conference will do is, if we show as an industry what the industry is already doing around addressing this issue, I think that will attract the support we need, not just from governments, but also from private investors. So I agree, it's a very big question. Where will the money come from? But as you've seen in the shift in Shell, BP and Total in particular, the energy companies know that they want to own the next infrastructure and distribution of future fuels that are not just going to power the shipping industry, but are going to power land-based industries. And I think what's essential is that shipping doesn't end up at the bottom of the barrel, as it were, the last in the queue. Shipping has to be part of that on day one. And that's why I liked what Bill Gates said, because if we address shipping, and shipping should come ahead of aviation simply because the technology is there, it's just a question of scale and investment. But if we can address an industry like shipping, we're helping every other industry decarbonize. And so that's why I think we just got this confluence of circumstances and events that are a real game changer, which may well make this happen.
Yeah, but the industry has to be profitable. Fundamentally, it has to be profitable. So if the shift to carbon free means that there's less ordering of new ships, that will create the financial conditions that allow investment in new technology. And to the end user, to the consumer at the pump or in the sneaker store, the increase in cost is negligible. And they have the benefit, of thinking that that the goods have arrived there in a sustainable way.
But the great thing, Michael, as you said earlier, is supply is what's bedeviled shipping. And the great thing about the technological challenge is it's creating a shortage of supply of capacity.
Exactly. So that's exactly my point.
Yeah, exactly. So that will help generate the earnings. But I think what's also different from things that we've heard in shipping forums for the last 20 years is this isn't about the ship owner bearing the cost. Yes, they can make a contribution. This is about wider society paying that cost and the ship owner accepting that it needs to make those investments if it can get the freight rates it needs, if it can get the retained earning it needs to continue to invest. I know, Martin, you wanted to come back on a point that we talked about earlier, unless you've now forgotten it.
No. Well, I've got a couple of, I think, what you said, Michael's very, very interesting. It's very economical, this. I can agree with both of you with one word, It's two bankers versus an economist. What a terrible combination. Talking, you mentioned my historical knowledge, and I do sometimes try to escape from that. But what strikes me about the history and finance is that we've had very big financial movements in the past, which came up with vast dollops of money when it was needed. And of course, in the last 50 years, one was the oil industry financing the big ship. The oil and the steel industry financed the big ships that were needed after in the 50s and the 60s to carry for the globalization of trade when they moved the steel mills to the coast and all that stuff. That all came out of time charters, and the time charters linked in with the emergence of the Eurodollar market, and you had really money on tap. You didn't have to be a rocket scientist to get it. You just had to get yourself a charter and find a trendy banker, And then I would say the other one was the KG system, which took half at the point it started, at the point that you may grimace, but the KG system was massively successful. It came in the 90s, and I remember companies like P&O were struggling. They were messing around with things like UK tax leases, which had got 3 feet of paper to just, and you never knew what was going to happen. And the KGs came and did it with no hassle, and they financed half the container ship fleet, basically, round numbers.
And bankrupted several German financial institutions in the process.
Well, I think basically they made a few slight mistakes towards the end, but nevertheless, they got half the fleet on the water very economically, very effectively. And what I'm really talking about is what sort of mechanism might we find for the future with all your pals on these forward-looking, Bill Gates behind us? What mechanism could you set up to turn this stuff out very quickly? And the second point I would make is that, I think the water ballast treatment thing was a bit of you mentioned VHS and Betamax. And frankly, if you invested in Betamax, you lost a fortune, And when we went for the water ballast systems, we ended up with 52 different systems on offer, and nobody could understand what they did. And equally, there's lots of people out there vying for the middle of the squash court with these operating systems for ships. How is a financier going to know that they're not financing the Betamax of the future? How do you know you've got a depreciatable ship?
Sorry, I'm just dealing with someone who thinks I'm in the pay of Bill Gates because I keep mentioning him. I think shipping historically has had these sort of great advances. Then we overdo it and people lose a lot of money and nothing happens. But one of the things that is also we haven't really touched on is regulation and weak regulation, as you highlight with the ballast water treatment thing. It's clearly an issue. And I think going back to Glasgow, the IMO is a UN body, and it's an opportunity for the UN itself to give the IMO some sort of mandate and instruct the countries that sign up to the Glasgow Declaration or whatever comes out of Glasgow, instruct those countries to vote in the IMO and other international bodies to actually implement the policies that the Climate Change Conference decides. We haven't got long to go, so I wanted to ask each of you, and then maybe myself, as we're experienced practitioners and observers in this industry, do we think this, I think Michael and I do, I'm not sure about you, Martin, think this is the beginning of the transformation of the industry into a more sustainable and profitable industry, regaining its sort of 19th century role around industrialization and 20th century role in achieving globalization? Or will it be the end of the industry all subsumed into a small subsidiary of Amazon, as Michael has intimated with his raising it? Is this we're going out with a big bang, or is this developing a really brighter future for this industry it hasn't seen for a long time? Well, Michael, you go first.
I think, as you've always told me, there is no other solution for moving goods economically around the world. So unless we're all going to start growing and making our own stuff, I'm very confident in the future of the industry. I do believe that shipping and logistics will continue to merge, and you're going to see much more hybrid type companies where logistics is shipping is part of a logistics chain, and big logistics companies will want to control that more carefully. But I am a firm believer in a bright industry for the future, and I have been incredibly impressed by the innovation. It's a really, really, really incredible innovation. The container box is fantastic, or multiple tanks on a chemical tanker ship. It's quite incredible what you can do with something that is really a basic commodity.
Well, that's true. It's a rather uncomfortable fact about that case, though, Michael, that there's only about one of the liner companies in operation in the 60s survived. It decimated the liner industry basically because it was too difficult. You got 100. One of the problems is a lot of companies are very locked in their present position, both from balance sheet and operational points of view. And I would argue that the problem today is that I hate to always be sort of putting the negative side, but that we of course, the industry is going to change. The trouble is, we've just spent 40 years perfecting an industry which is immensely cheap and cheerful. It's, you know, it piles them high and sells them cheap. You know, the average bulk shipping company, maybe 2 people in the office for every ship at sea, and the sort of personnel systems, all the stuff we've heard about crews, is just during the pandemic just supports the fact that we don't have horizontal organizations which are really using all this talent that we've got very effectively. So I think it's a very steep hill to climb. And going back to your original question, you know, the first thing I would do is start building teams within my business and hiring good people, because compared with the cost of a ship, it's not much.
Yeah, no, I think that's right, and I think Michael's point about shipping and logistics sort of merging, I'm reminded of when we launched the Getting to Zero Coalition, the UN Climate Action Week in, I think it was September 2019. You know, we thought we were going on a very long journey. I have to say, in sort of 18 months, we've come much, much further. And I think part of that is because not just the collaboration and the collaboration as opposed to sequential decision making that shipping is used to, but also I think the recognition finally of the consumer around what shipping does. It's not perfect yet. Someone I used to refer to often was Greta Thunberg, because her generation is the one that is really demanding that every industry, if you like, addresses the environmental consequences. And I think it's getting to those consumers understanding when they buy something, you know, the environmental cost of the manufacture of that, the transport of that, and the recycling opportunity, all those things, that is, you know, that's the new industrial revolution happening. And I think when the World Economic Forum talked about the 4th industrial revolution, they probably didn't, a few years ago, they probably didn't really see that that was actually going to be broader and maybe faster because of other things going on. So I'm a great optimist. The other thing I feel is that shipping as an industry does respect wisdom and age, even if, Martin, you look a lot younger than I know you are, and that actually it's an industry that long may that continue, so that those of us sort of nearing the second half of our careers, as it were, can continue to enjoy the exciting period this is going to produce. And I think it's going to challenge a lot of things that, you know, we were brought up with when we started in this industry. Half of them have already really disappeared. The other half, I think, are also in the process of disappearing. And I'm very encouraged listening to, you know, the panels the last 2 days and other Zoom webinars and things, how much real energy is now coming into trying to make things happen. And I think we've been very good at talking in shipping, but I think we are now about to do things in shipping from within the industry and outside that make a real difference. So I think we've got about 30 seconds left, each of you, Michael and Martin, to have a final word before Nicholas intervenes. Michael?
I was being polite, and no, but thank you very much, Michael, and thank you for moderating. And as ever, it's a pleasure to be with the two of you, and hopefully our audience has had an opportunity to enjoy our conversation.
Yes, and yes, the party's not over. To be continued, I think, is the appropriate comment, Michael, and thank you very much, Nicholas, for hosting us.
Well, I'm the one thanking you. Frankly, I'm not trying to flatter you, but it's not very frequent that we have the chance to listen to so much insight, you know, in one place. So I'm delighted that you were all three available to do it. Thank you very much. And I look forward to the next one.
Your problem, Nicholas, your problem is you're never going to fill the Metropolitan Club again, because we'll all want to do it this way.
I quite like a drink.
I think it will be very interesting to see how things will develop over time. I'm sure that when we can all travel, everybody will rush to the airport. and we're going to go all over the world. But after we do that for a short while, maybe people will say, do I need to do it? So it will be very interesting to see how things are going to pan out. Anyway, but in the meantime, tremendous thanks. I really appreciate it. And have a great evening to all three of you in London.
Thank you.
Thank you.
Bye-bye now. Bye-bye.
Bye.